If you've ever looked at your Quicken budget and thought, this doesn't make sense, you're not alone. Your transactions look right, your account balances look right, but the budget feels off. And most of the time, that doesn't mean Quicken is wrong, it means the budget is interpreting your activity differently than you expect. If you're new here, I'm Kelly, and on this channel, we focus on understanding how Quicken actually works so your numbers make sense and you can trust what you're seeing. This video is about why Quicken budgets often don't match real life, even when your transactions are correct, and how to fix that without rebuilding everything. This usually isn't a data entry problem, it's a structure problem, specifically how spending, payments, timing, and categories interact. When you make purchases on a credit card, that money goes onto the credit card balance. That's the spending event. That's where the expense actually happens. If those purchases are categorized, that's how they flow into your budget. The budget doesn't look at balances, it looks at categorized spending. Now look at the payment. When you pay the credit card from checking, that money is just moving from one account to another. It reduces your checking balance and reduces your credit card balance, but it doesn't create new spending. It's a transfer. So here's where the confusion starts. If your credit card purchases are not categorized, or they're categorized in a way that isn't included in the budget doesn't see that spending at all. So now you're in a situation where you know you spent money, but the budget doesn't reflect it. Then the credit card payment happens. You see real money leave your checking account, and naturally you think, why isn't my budget showing this? This is the moment where a lot of people try to fix the budget by budgeting the payment itself, but that's not fixing the problem. It's just pointing the budget at the wrong transaction. So what's actually missing isn't the payment. What's missing is properly categorized spending at the purchase level. Once you see it this way, the behavior makes sense. The budget isn't ignoring your money, it's waiting for spending to be categorized so it knows what to count. Now let's talk about timing, because this is another big reason budgets feel wrong even when nothing is actually broken. Quicken budgets are based on calendar months. Real life is not. So say if a bill posts on January 31st, that counts as January spending. Now if that same bill posts on February 1st, that counts as February spending. So nothing about the bill changed, nothing about your spending changed. Only the posting date changed. That's why one month can suddenly look high and the next month can look low, even though your overall spending pattern stayed the same. If you only look at the month of February, then it feels like a problem. But when you zoom out and look at a few months together, the pattern smooths out. Very often, a bad month is just timing noise, not overspending. Now, there's one more layer that affects how this feels. Rollovers. Rollover controls what happens to unused capacity from an earlier month. In this example, there was unused capacity earlier, but it wasn't carried forward. Later on, the need is higher, and it feels more painful because that earlier capacity isn't available anymore. Nothing went wrong, nothing was miscategorized. This is just how time is being handled. Rollovers don't fix spending. They change how strictly each month is judged on its own versus balanced over time. So once you understand why the budget feels wrong, the good news is this. Most of the time, you don't need to rebuild anything. You're usually not dealing with a broken budget. You're dealing with what the budget is being asked to count. So the goal here isn't to start over, it's to make sure the budget is focused on the right things. First, look at which categories are actually included in the budget. Only categories that represent real spending should be there. If something is a transfer, a payment, or money just moving between accounts, it probably doesn't belong as budgeted spending. Removing categories that don't represent true expenses often fixes more than people expect. Next, verify credit card handling. Make sure spending is being counted at the purchase level, not the payment level. When purchases are categorized correctly, the budget has the information it needs. So when payments are treated as spending, the budget gets distorted, either by double counting or by pulling focus away from the real expense. So this is a payment coming from the checking account. Now, it shouldn't be labeled as a spending category. So fixing this correctly matters because doing it wrong can create duplicate transactions, and that deserves its own walkthrough. So you're not trying to make the budget match your register balance. You're trying to make it reflect categorized spending. Finally, change how you evaluate the budget. Don't judge everything based on 1 month. Look for trends. Look for patterns. Ask whether something is recurring, seasonal, or just a timing shift. For example, our fuel spending is much higher in the summer because of my husband's lawn care business. It's important that those fuel transactions are categorized correctly so they don't muddy our personal fuel spending reports. But even when they're categorized correctly, that fuel still uses real cash, so it still needs to be budgeted. A single month can look wrong for perfectly normal reasons. The budget becomes much more useful when you treat it as feedback over time, not a pass-fail test every 30 days. This card is a good example of why accuracy matters. So I use a dedicated fuel card for this category. It's the Abound Federal Credit Union Visa, and it earns 5% back automatically. So because everything is categorized correctly at the transaction level, I can actually see the impact clearly when I review this account. So since we started using this card, the rewards tied just to fuel have added up to over $2,000. And that's not because the budget is doing anything special, it's because the spending and the payments are being handled correctly in the register. If a payment like this were being treated as an expense instead of a transfer, the fuel category, and eventually the budget, would look completely distorted. So another reason I like using this credit card, as an example, is simplicity. There's no rotating categories to track and nothing to activate each month. The rewards just apply automatically. And just to be clear, I don't have any partnership with this credit card or the issuer. This is simply an example from my own file showing why clean categorization and structure matter. When a Quicken budget feels off, it's usually a signal to adjust interpretation or structure, not a sign that you failed or that Quicken isn't working. Once those pieces are aligned, the budget starts doing what it's meant to do, helping you see patterns, make better decisions, and stay in control of your money. If this video helped, give it a thumbs up. It really helps the channel. And if you want more practical Quicken guidance like this, make sure you're subscribed. If you want deeper judgment-based explanations and occasional Q&A, the Patreon link is on the channel page.